What's up, everybody? Woo! Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week, except for yesterday. Today's date is February 4th. And this show we use technical analysis to get a good idea as to where the market goes. We use a little bit of intermarket analysis, kind of understanding different asset classes, not just the indices, but we look into the dollar, so currencies. We look at commodities, gold, silver. And then we also look at bonds and yields, just to kind of overall get a good idea as to what potentially may happen next. In today's episode, got a lot to talk about, so let's just go ahead and get right into it. Alrighty, welcome back. First, I want to kind of just start with the framework of this episode and kind of explain to you why I've been posting a lot more chart setups as of recent. So if you follow me on Twitter, you probably noticed that I've been posting a lot more chart setups. And if you watch my market briefs, you probably noticed that I started adding more trading sections into the videos. Why did I do that? That's the biggest question you should ask yourself, is not just, oh, wow, he's finding some good setups. You know, some of them worked out really well. Some of them were kind of duds. But the question that you need to ask yourself is why? And the reason why is this. If you remember this chart, this was the chart that we said, hey, there's a couple different areas. We started breaking down from the top end of this channel, and we said there's two areas you want to look at right now, all right, that I was keeping an eye on. There's two different charts. There's the S&P 500 and the VIX. So first off, we marked out 50-period moving average. If we get down to this area, start looking for setups within S&P 500 or random other indices, different stocks that you can find that have been going into an area of support that you can trade. Because that creates better risk versus reward trades is what we were saying. We said if it breaks down through that area, then we'd start looking targeting here because there's much more confluence right in this area. We have the 200 period. We have this trend line down here as well, and it matches up pretty much with the February high over here. So yeah, the reason why I've been posting a lot of charts recently is because we pulled into the 50-period moving average. It made sense from a risk versus reward standpoint. And then on top of all of that, if you followed me on Twitter, one of the posts that I post was right when we got up here, this is where I said it might sound crazy, but this is where you'd want to take profit or start looking for positions to go long in. And what do you know? The VIX here at this area of resistance, and we fell pretty tremendously in the last week or so of trading, even down today, almost 5%, cracked below this trend line. Last time we cracked below this trend line was right here, and we immediately saw a big run up. So what's going to happen here moving forward? Well, first off, what can we do moving forward? So you have to plan out, from both a bearish and a bullish perspective. If we start filling in this gap over here, you're going to want to make sure that you're taking profits on your long positions. Now, I've already been trading very carefully, so I've been pretty aggressive with taking profits when I'm in the money, and then I kind of just scale it back a little bit and then let a little bit remain in the position. So, for example, if I trade, 100 share lot, which is typically lower than what I typically trade, but lately I've been doing that just because I'm being more careful. So then I would take off 33% at one of my targets, and then I take another 33%, and then I let 33% continue to run. And while it runs, if we get some big moves, what I'll do is I'll just trim off a little bit of that position and then let a little bit more run. And if I get stopped out, I get stopped out, all right? So we started looking for long positions up here, just like on the S&P 500, we started looking for long positions right here. And then what we're seeing now is, okay, so if we're starting to come down and fill gaps, and we're leaving gaps above us on the VIX, and the VIX gaps usually get filled. This is the gap that hasn't got filled that's been bugging us. Once it gets filled, that could set itself up for a run higher, which could potentially pull the S&P 500 or various other stocks down. Okay, so that's now what I'm going to be looking at. Is I'm going to be watching this coming down to fill a potential gap. I'm looking at this pink box here, and then also this gray box that has been opened up since late February. All right, we're still relatively high on the VIX, all right, as we're making new highs in all the indices. The S&P 500, I don't know if the NASDAQ made a new high, but the IWM did, so a bunch of them, all right? So this is kind of the framework that I want you to pay attention to while we move forward through this episode. We're going to first start off with the indices. We'll do some quick technical analysis, then we'll go into the indicators, commodities, and then also dollar bonds yields. And there's something important that I want to show you with the dollar, okay, because that's been the big chart that everyone's talking about, the dollar. What's going on with the dollar? It keeps going higher, but equities haven't even been affected yet. Yeah, it's because, we'll get into it later. Let's go into the S&P 500. All right, S&P 500, all-time high, could be potentially a double top, right? So we got to call that out for what it is. It was resistance there. Now we're coming right into a big, strong, bullish candle. Okay, just opened up, went straight up into the air and closed at it. So opened up, didn't go really much lower, and then closed at its high too. So just overall, just a very strong candle after it bounced from this 50-period moving average. We see the price percent oscillator turning up, which could be a bullish crossover. That would be a good sign. The RSI is back above 52. Everything looks healthy. It's trending up. This trend has been broken once, but as stated previously, it's still holding right there with the 50 period. So bullish trend is still intact. 30-minute time frame, I want to just call out. We did make that new time high, so we broke above it, but look for this as an area of support now going into tomorrow, or potentially resistance depending on where we open, where the futures market takes us. Now we have 2 gaps below us, and those could also be areas of support. So 382, and then also all the way down here at 376. This right here is not the most normal looking behavior. You can see how we kind of like just been choppy, big gaps down, scary action, and then in just a couple of days, bam, right back up to an all-time high. So the market is very, very euphoric at this point still. What I want to notice here is the RSI is getting overbought. So if it gets continued to get overbought, or if it gets maybe tomorrow we gap up tremendously, that would be actually a sign for me to sell into that strength, because of the fact that we're moving into an oversold territory. So there's more risk to going long than there is to the downside. Now that doesn't mean that for sure that's going to happen, but just note if we do get gap up, we're going to be even more overextended to the upside. Let's look at the Dow Jones daily time frame. I just have this area right up here at 31,250. That's going to be that area of resistance. We still have a gap up there. That could be also resistance, so a little bit of resistance up ahead. We pulled down, broke through this channel, but we just got right back up really quickly. And then the price percent oscillator also is trending up now, which could be a bullish crossover as well. RSI also above 50 as well. So still trend intact. We're looking bullish. This is a good sign for various equities. What I want to call out was the video that I last posted was about Dow Jones 32,000, and what we did was we showed you the broadening wedge pattern and then a potential for a breakout. Well, guess what? We broke out of it. All right. We haven't quite reached the all-time high. As you can see, there's a high up here at 312. This is the DIA. This is the ETF for the Dow Jones Industrial Average. All right. So we have the breakout of the broadening wedge. Maybe we might come back and get a back test and then move higher. Too hard to say right now, but just know that this pattern did break out to the upside. And if it does hold true to its descending broadening wedge pattern, we can have that target hit around 32,000 on the Dow, which would be roughly 320 on the DIA. Interesting stuff. NASDAQ, bull channel, still at the top of the channel. All right, so we had a little bit of a gap up today, and then we just ramped up higher, closed at, was this an all-time high? I think we closed at, yes, we closed at an all-time high, but I don't know if we reached an all-time high. I can't really tell right here. But as far as like the price, reaching up to that area, but we definitely did make an all-time high close on the NASDAQ 100. So a lot of strength there, still a very strong bull channel, it's still intact. So yeah, even if we start pulling down all the way to 13,200, we'd still be in a bullish trend. So things are looking good there. NYSE, the NAYA, what we're looking at here, I'm just paying attention to this channel now that it's in. So we came down here, hit the lower Bollinger Band, bounced right back up, recapture the 5 EMA, and now we're heading to make potentially a double top. All right, now the double top could be bearish, but it also could potentially break through that level. We're looking at the MACD over here also, still above 0, and it could be potentially crossing over here. So once again, this is just a period of consolidation. It's not as strong as some of the other ones, but when you take into count, previous days, if you look to the left of the chart, you're still seeing bullish action all the way up. So things are still bullish. Things are still intact so far. Russell 2000, all-time high, continues to ramp higher. Negative divergence on the RSI that's building, negative divergence on the price percent oscillator. Looks like it's about to do a bullish crossover right here. This is still one of the ones that I will not go long on, but what I will go on is various stocks within the Russell 2000, and I've been doing that. And the reason why is because some of them will not be as overextended as the IWM, and it won't, from like a monthly perspective and a weekly perspective looking chart, it's structurally just unsound. So there's more risk to going long than there is to go just basically stay out of it. I was going to say go short, but I only would go short on very big overextensions, and I would hedge a position with that. So yeah, various stocks are totally fine to do, but I just wouldn't personally just buy in at this all-time high right here unless we get some more consolidation moving forward. Now let's get into some indicators. And then, by the way, at the end of this, I'm going to kind of just wrap your head around my thoughts, or kind of give you just kind of an overall view of what I'm thinking moving forward. Here's the NIMO, NYSE McClellan Oscillator. We're looking at breadth. Look, we got a little bit of a shot up of breadth, still relatively weak, 2310. Wasn't an overextended reading to the upside as we're making an all-time high. Negative divergence still. Maybe that's going to change. Maybe we're going to get a burst of energy. Maybe not. Too hard to tell. Had a negative divergence here, negative divergence there. Same thing with the null, new high, new low. Negative divergence there, still a negative divergence building there. Okay, and you can see right here, okay, we had this big spike that we haven't seen for quite some time. That was right around here. We dipped down, came back up, all-time high, less breadth, negative divergence. Bam, right here, that big breadth, we were at an all-time high. Had a little bit of a gap, right? Dropped down. Now we're starting to see it come up to an all-time high, still below negative divergence. So it doesn't mean that for sure it's going to play out or anything, but it is still very worth noting. That's why you got to be careful in these markets. BPNDX, we bounced from this oversold area on the RSI, and you can see, boom, right back up. Okay, we called that out when it came here. We said, okay, now it's positioned for a potential bounce. What do you know? We got the bounce. That's the NASDAQ for BPSPX. Same thing. We're not oversold anymore. We bounced right back up. Okay, what I want you to note on these indicators is they're not oversold or they're not overbought. And if they're not overbought, that means they still have room to potentially go higher, okay? Here's the XLU over the SPY, the beta rotation strategy, white paper written by Michael Gayad, still on a risk-off environment. I don't know where the week's going to close. So if the week closes, still remains a risk-off environment, that lets us know that there's conditions out there to still suggest higher volatility, okay? You can see right here the relative strength of the XLU over the SPY. It's just been basing out right here, but it's been kind of just up, down, up, down, up, down, up, down. These little ticks, maybe we might start moving up, maybe we won't. It's really too hard to tell at this particular point in time, especially with all this, more stimulus stocks, dangling the carrot in front of us again. Let's look at commodities. Gold got hammered down again, and we actually called this out quite some while ago, probably around here. We said it looks like we can have that death cross take place, and now it looks like the death cross is about to take place. We have the 50 period moving average at 1855, and we have the 200 period moving average at 1854. So we're literally just $1 away from it being a death cross. So my guess is, just by the look of this, there will be the death cross. That means it's a bearish crossover. Not the greatest sign for gold, but that doesn't mean it's going to stay there. All right, now what I want to call out here, yes, we tried to break out of this, failed to break out. That was like a little double top thing right here. And now we're coming back down. So if you look at this and you draw a horizontal line from here, then a horizontal line to here, maybe that's just the channel. Maybe we got a little bit over ahead of ourselves, and now we're just kind of channeling back and forth before maybe a potential move higher. Now, this should be a strong area of support, 1775. You saw it here, and then you saw the resistance over here. So it'd be interesting to see if this support can hold. Now, when I look at the yearly time frame, right, we're boom all the way up. This year we are down 5.48%. Look at this. When you zoom out on a yearly time frame, this move that's been going like this doesn't look nearly as big, right? All that's that price action right there, and then a little bit right here too. So yeah, this pink box right here, 1700 to 1400, that is my next buy zone if we can reach down into those areas. Till then, I'm just kind of watching it as time progresses. Silver also had that kind of big move to the upside with all that whole silver squeeze stuff. Is that happening? I don't know. I don't even really feel like commenting on it. Fibonacci retracement level, we're down at right around 50%. I don't see why we can't reach down to 25.15 and find some support down there too as well. So keep an eye on it. We're still above the 50 period. We're still above the 200. They're both pointing up, still bullish trend. So this chart looks a lot stronger than gold still. The only thing that I want to call out is the price percent oscillator. Looks like it's losing some momentum, pointing down, meaning that we can also have a bearish cross right there. Now let's get into the dollar. All right. Whew. I'm out of breath almost. Okay, so first off, before I go into the dollar, let me touch really quick on gold. The gold is coming down into this area of support, right? All right, so let's get to the dollar. The dollar's breaking out, okay? When the dollar breaks out and goes to the upside, people think, okay, well, equities should feel the pain. Well, it's true. Equities can feel the pain and will feel the pain if the dollar keeps on rising. However, we're still not even back to 92, which is my key level that I'm looking at from this breakdown. So when we broke down from this level and we started really falling down, that is when we saw things like Bitcoin, when we saw equity markets or just really start to scream higher. All right, so now we're seeing it move up, and either the equity market is just ignoring this because it's not, above any key levels yet, and or it just hasn't recognized it, which I just highly doubt that it didn't recognize what's going on here. Now, another thing I want to call is this 10-year minus 2-year. A lot of recessions happen from getting an inverted yield curve and then steepening right out of the gate. And what we're seeing here was from late 2019, I believe it was, the 10-year minus 2, inverted its yield curve, and now we're starting to see the yield curve really start to steepen here. You can see it's been at a high. It's probably a 3 or 4 year high. I had to go back to look, but it's right around there. Okay, so that's bearish for equities if this continues, based off of history of what we've seen on steepening yield curves after the fact. It's been inverted. Now, rates are being plugged down to basically zero. So we have things like the 10-year and the 30-year going up on us. And if you look at who performed best today as far as the sectors go, or the spiders in the S&P 500, you notice that financials took this top spot. All right, so what am I looking at? Well, first off, I'm keeping an eye on 92. I think this is a temporary bounce. I think the market thinks it's a temporary bounce, and that's about it. Maybe we get a little bit of short covering, but this is one of the big big shorts going on right now is on the US dollar. And at this particular moment, if we don't capture 92, I still think that it's in a downtrend. And you can see that just by looking at the moving averages. 50 is still sloping down, even though we got above it. 200 is still sloping down. So yeah, we're seeing some price movement up into that range, but that doesn't guarantee that we're actually going to break out of that range. Now, I will say from a bullish perspective on the weekly time frame, we're breaking out of a falling wedge as well, and it looks pretty strong. Does it have legs? We will see. I mean, it's going to take time to see that play out. Bonds and yields. Yields just trending around this previous high. You can see the only thing I want to call out here is higher lows on the 10-year, higher lows on the 30-year. So it's just trending up. How high is it going to go? Couldn't tell you when we have these rates plugged down to zero. And this is good for banks. This is good for financials, okay? Why? They borrow short-term, they lend long-term. I say that often here. 10-year minus 2, and then the 30 minus the 5. The spread has been increasing, so things are just trucking along here on the yields. So this is all stuff that we're going to have to pay close attention to. So just to really wrap, my thoughts up and kind of, put a bow on it, I wanted everyone to really understand the framework where I was coming from and why I started posting more long setups and why I've been more accurate with my long setups. That's because of the timing and what we were planning ahead of time around the VIX, the S&P 500, and the various other indices. Okay, that's the only reason why. We'll continue to do so until we see something potentially turn on the VIX and also, the S&P 500 or the various indices. My concern moving forward is that 92 level on the dollar, and the markets, all of a sudden paying attention to a rising dollar or potentially rapidly rising dollar, and then also this curve that has continued to steepen. Because eventually the markets are going to take notice. We have a lot of debt, more debt than ever, right? So the higher these rates go up, the more expensive it costs for, corporations and various other people to manage their debt. So it's a lot of a storm kind of stuff brewing right now. So you just need to be very aware and very particular with your strategies and setups on individual stocks. You need to be quick to take profits off the table, and then you need to let your winners win. That's how you got to do it in this business. So that's all I got for you on today's daily stock market brief. Hope this helps. You get a good idea as to where, what I'm thinking and, where I believe the market might be headed next. So I will see you guys on the next episode. Goodbye.